Okay, let's get a bit of a sense of the markets week in review for you. Olawale Oluse is joining us from Afrinvest. He's one of the research analysts talking to us here on the program. Wale, thank you very much. We appreciate your time.
Good morning.
Yes, good morning, Wale. We appreciate that. Okay, let's start from where I was just finishing off the what you call intervention yesterday by the FMDQ to widen the bid-ask spread on FGN bonds to tame the volatility that we've seen in 48 hours as far as the news of the JP Morgan FGN bond delisting came to. Talk to us about that.
Okay, just like you said, the FMDQ came in to widen the volatility, but from our hand here, what we've noticed is that as against expectation that the bond market will the bearish sentiment in the bond market will increase due to the JP Morgan notified the listing of Nigeria bonds in their index. We actually noticed that between Wednesday and yesterday, yields in the bond market actually eased as against expectations. We saw some bullish sentiments that were basically driven by local investors that increased their interest in the bond market as against expectation. So I think what the authorities are basically doing is to ease the volatility in the bond market, like you said earlier.
While a very interesting point you just pushed through there, local investors, you mean, increase their stake in the market, in the Nigerian federal government bonds, as soon as JP Morgan from New York says we're going to delist those bonds?
Exactly. That's quite surprising because as against expectation, on Wednesday when the news flow came in, we saw a lot of early sell-off in the market. Yields went as high as 100 basis points. But towards the end of the market, we saw a quick reversal of what is happening in the market. And the market went bullish and it closed a little bit lower than the initial 100 basis point increase in yield. And the same sentiment was sustained yesterday when a bullish sentiment was also noticed and yields closed a little bit lower than it did on Wednesday.
So in a manner of speaking, you're saying that the central bank and the government, let me put it that way, have rallied round, isn't it? Nigeria, as it were, and say, look, if foreign investors want to get out of our index, we are here to pick up this market because this is our own government. The yield is very good. It's still attractive on FGN bonds to doing 14, 15, 16%. That's quite attractive, isn't it? So this looks like we've taken, the market here in Nigeria has taken the heat out of JP Morgan in New York.
Yeah, just like you said, it might be that the authorities are trying to prop up what is happening in the market. But I think something is instructive here. The fact that yields are actually very attractive. A yield of 16%, between 15.5% and 16%, is actually quite very attractive for the market at the moment. And it is an FGN bond. I mean, risk there is quite minimal compared to what is happening in markets like the equities market. So I think investors are likely to be taking advantage of this attractive yield at the moment, notwithstanding what is coming from JP Morgan.
Very interesting analysis there for us. We appreciate your time this morning. Do have a great weekend.
Thank you.
Olawale Oluse is a research analyst in the team at Afrinvest here in Lagos.